Hey guys, welcome back. Today I'm going to show you how to trade the Asian session using ICT Concepts. The Asian session starts from 8 to 5 p.m. Australian Eastern Standard Time, and this session is well known for trading any Asian pairs or any Asian cross pairs. The reason being that Asian pairs are most popular during this time. So the Asian session isn't the most popular session, but it does range pretty well. So the range typically will have around 20 to 25 pips. That's about how much you can get from the market, sometimes even more. And I was able to get around 15 pips a day. And I want to show you guys how I did it. So as you guys know, I normally start off my market analysis and trade analysis on the daily time frame to form a higher time frame narrative. But lately I've been incorporating the monthly into my analysis. So this is how I do it. So on the monthly, we can see from March 2020, the market has been trending upwards. And I like to use the fib when I'm determining my bias. So I like to use the Fibonacci tool, which is called the fib, like I said before, to measure where's price going from swing low to swing high, if it's an uptrend, and a swing high to swing low if it's a downtrend. So we can see it's in an uptrend now. So what I'm going to do, I'll pick my swing low here, measure it all the way up. We can see that price has been traveling from here to here, dropping all the way down to the 61.8% mark, and it seems to be going upwards from here. Now, why is that? When studying ICT concepts, ICT himself did explain that when smart money takes price and move, it will normally like to go into discount or premium range. Now, what does that mean? So it means that if price is traveling upwards, smart money will like to take price beyond the 50% mark, purging below this level into a discount before riding back up again if it's an upside, and vice versa. So if price is going down, the price will definitely, smart money will want to take price above the 50% mark to this level and then proceed downwards. So as we can see here for the Aussie yen on the monthly time frame, price travel upwards, hit the 61.8% mark, and it seems like it's going up again. So let's go down to the weekly and see what's happening. As we can see here as well, a little bit more candles on the chart, but it's the same, going up all the way here, trending downwards, hitting that 61.8. Now it's going up. So one thing you guys must know is that the levels on the high time frame will carry more weight compared to the smaller ones. So when you're looking at smaller time frames for executions, make sure that you're actually using the levels that's formed on the bigger time frames. Because a lot of the times, and I've learned this from the past before, when I just trade the smaller time frames and I think the smaller time frame levels will hold, most of the time it doesn't. So anyway, on the weekly time frame, we can see prices going up. So we want to take part in that uptrend. So as we can see here, where's buy side liquidity? We can see buy side liquidity resting here and here as well, potentially. And we can see our sell side here and here. Well, the reason why I'm plotting these levels, it's just because it's the closest to where price seems to be traveling to. So as we can see here, price is around 91.73. It's probably going to be wanting to reach this buy side liquidity before reaching this sell side. And that's probability speaking, because price is closer to towards the buy side liquidity. So most likely you'll travel there first, right? So anyway, down to the daily time frame, as we can see price is going to travel up as well. So remember I mentioned the Fibonacci on the monthly chart. I can show you how it works again as well. So as we can see, there's a swing low to swing high here. If I chuck on a Fibonacci, swing low to swing high, can you just sorry, can you see where price is traveling? Price traveled all the way from here to here, uptrend, but smart money took it way below 50, way below 61.8, deep discount before running upwards. So every time when there is when let's say the market, if you think the market's going long, right, the price will travel like this. I'll just show you guys real quick. I'm just trying to find my tool here. So if price is traveling upwards, you'll go like this. You'll go up, down, taking out liquidity, and then traveling upwards again. And vice versa for short. So if it's short, you will go like this, down, take off liquidity, and travel downwards. So as we can see here, price traveling upwards, took out some of that liquidity there, deep discount, now it's on a price run running upwards. So we can take away that monthly one, that's fine. Now this is daily, and that's buy side. So price will want to be reaching this side. So let's go down to the lower time frame and see what's happening. So as we can see here, there is a fair value gap right off the bat, nice and easy to see. So notice that there are little lines here. These are just session breaks. It tells you what days they are and when the market starts. So it's Monday, Friday, Thursday. So just to make it easy, I'm just going to take that away. Just to make it easier. So if I was to predict, price will want to reach up here. And that's where the next liquidity zone is. Price want to reach there, smart money want to come here, potentially do a little bit of liquidity grabbing, perhaps going upwards or cracking down again before traveling up. So I remember this trade, I participated in a counter trend. So meaning that when price went up, I took part in the liquidity grabbing side of things before running upwards. And it was around, I think, let me put on my market sessions. So this indicator is basically a trading view indicator that I use. You guys can find it. It's called FX Market Sessions by Boyd Toki. You can pretty much set the time, the sessions of it. I set these sessions to the kill zones. So that's when you see these colors, it means that I prefer trading this time because they are kill zones. That's when volatility is present. Okay. So I took part in this trade. I saw price running up into the fair value gap, and I realized price was going to go up into the buy side liquidity here, and price will definitely want to fill this gap, right? Because it created an imbalance when it went down all the way. So price will definitely want to fill this gap, but before going up, most likely price will want to do things like that, like see when it goes up, comes down a little bit before punching upwards, go down, go up, punch downwards before going up again. So it's grabbing liquidity in all these zones. Where is my highlighter? So it's grabbing liquidity here, it's grabbing liquidity here. Excuse me. Sorry, it's grabbing liquidity here. And if I go back to the daily time frame, sorry, the hourly time frame, you can see that these are all liquidity grabs. Grab liquidity, traveling upwards. Grab liquidity, traveling upwards. So I participated in this trade, in the counter trend liquidity grabbing trade. Why? Let's zoom in and find out. Okay, where's my zoom? Sorry, too big. So a lot of the times when you look at a price like that, big run up, down, a lot of people will think that Oh, Leslie, this is a market structure shift because it went upwards. It broke down. Look, it shows that the market wants to go down. Not really, because if you're looking at the high time frame, the daily time frame, like I said, where's price going? Price already took out liquidity here. It's on its way up. Why would price want to go down before reaching the buy side liquidity? This is what I've learned. Follow the higher time frames, the level on the high time frames. You don't want to go down to the 15-minute time frame and look at this and just think price is going to make downward moves. No, price is actually reaching down here to grab liquidity. But here's what I spotted, right? So I'll just take this away for now. Take this fair value gap away as well. So as we can see here, price traveled all the way up. I spotted this. Well, after enough practice, you find this pretty easy as well to the naked eye. So price went all the way up, made a couple wicks. It occurred to me, hey, hang on. Price went up, failed to break, come back down. Grab a little bit, grab more, ran back down. So it tells me that smart money is actually grabbing liquidity here. And when smart money grabs liquidity, where do you think it's going to go? Downwards, right? Downwards. So I'm on my 5-minute time frame. Because I traded counter trend, I reduced my risk a lot. So normally if I risk 0.5 to 1%, if I'm following the bias, I'll cut that in half when I trade counter trends. And I normally take my partials really, really quickly. So when I saw this, it made a higher high, higher low, higher high, higher low, higher high, higher low, broke this structure. Took out the liquidity, broke this structure, market structure shifted all the way down here. What did I tell you? Swing high to swing low. Price is at a discount. Price went down, went up, hit the 50% mark, and went all the way down. So I took this trade. I think I entered around here, just at the 50% mark. Put my stop loss above that swing high, and it was about a 1 to 2. I would say about 1 to 1.8 risk to reward ratio. Now, people tell me, hey Les, why aren't your trades 1 to 2, 1 to 3, 1 to 4? Because that's what you should be aiming for. Look, guys, I'm trading counter trend here, and like I said before, for counter trends, I'm not greedy. If I aim for 1 to 1, 1 to 2, or even 1 to less than 1 to 2, I'm fine because I'm locking in my profits. And I was quite certain that my stop loss wasn't going to get hit because price actually took out liquidity already. And look at this big displacement on that candle, right? Price is already willing to travel downwards. And as soon as I saw that my trade got triggered, and the trade went down a little bit again more, I shifted my stop loss to here and started trailing it. So I took it off here because I don't want to risk too much for counter trends. And during the Asian session or any session, anything can happen. I locked in my profits, done for the morning, and away I go. So this is something that you guys can try. Counter trends are not the most popular because people will argue against that, saying that why do you go counter trend? But if you see a good setup like this, you can participate in it. Just exercise proper risk management and you'll be okay. And if you've done your back testing and you know what works, that should be the way to go. Normally I will participate in trends that go with the daily or longer time frame bias, but this was just a trade that was too good to pass up. Look, hit the buy side liquidity, liquidity has been grabbed, took out some of those buy stops, big displacement, There was market structure shift. You know, I don't have to mention there was, you know, a couple of fair value gaps. You know, there were order blocks. You know, there was a bearish order block. Confluence everywhere. You've got you've got 1, 2, 3, and you've got displacement as well. That's 4. Confluence in price for you to take that trade. So, hope you guys found that useful. Follow me on my Instagram. That's where you can DM me. I can show you guys what I do or what I normally trade. And I'll catch you guys at the next one.